Good afternoon, and welcome to Fisker Inc.'s fourth quarter and full year 2023 earnings call. All participants are in a listen-only mode. After the speaker's presentation, we will conduct a question-and-answer session. As a reminder, this conference call is being recorded. I would now like to turn the call over to Eric Goldstein, Head of Investor Relations. Thank you. Please go ahead, sir.
Thank you, operator. Hello, everyone, and welcome to Fisker's fourth quarter and full year 2023 earnings call. As the operator mentioned, my name is Eric Goldstein, Head of Investor Relations at Fisker. Joining me today on the call are Henrik Fisker, Chief Executive Officer, David King, Chief Technology Officer, Dr. Geeta Gupta-Fisker, Chief Financial Officer and Chief Operating Officer, and Angel Salinas, Chief Accounting Officer. Please note that today's discussion includes forward-looking statements about our expectations. Actual results in the future periods are subject to risks and uncertainties that could cause our results to differ materially from those projected. These risks include those set forth in the press release we issued earlier today, as well as those more fully described in our filings with the Securities and Exchange Commission. Today's discussion may also include certain non-GAAP measures, including non-GAAP operating expenses. The financial results discussed today are presented on a preliminary basis. Final data will be included in Fisker's annual report on Form 10-K for the period ended December 31st, 2023. With that, I'm happy to turn the call over to Henrik.
Thank you, Eric. Good afternoon, everyone. Thank you for joining us today for our fourth quarter and full year 2023 earnings call. I want to start by thanking all our stakeholders, teams, and partners for all the hard work and continued progress we made in 2023. In addition, I'm very excited to introduce Angel Salinas, our Chief Accounting Officer, who joined us in early January. Angel has 28 years of public company accounting experience. He is here with us in the room, as Eric mentioned, and would be happy to answer questions, accounting-related questions later on. 2023 was a challenging year for Fisker. We achieved some important milestones for the full year. Fisker produced 10,193 Oceans and delivered over 4,900 across 12 countries. We are proud of what we were able to achieve, but acknowledge that these totals were below the guidance we provided during the year. Despite what we believe was the swiftest and largest delivery expansion of any EV startup company ever. Supplier delays and other issues unexpectedly hampered our ability to ramp up production and deliveries during the year. While we made good progress in solidifying our delivery network, we were not able to efficiently accommodate our backlog of the pace we and our customers desired and deserved. This led to the decision that we announced in January of a shift to a dealer partner model. In early January, we announced our dealer partner model in North America and hybrid model in Europe, a big strategic shift for Fisker. We are making significant progress on this rollout, and I'm pleased to report we already have sent our first invoices this week to several dealer groups. We have received over 250 expressions of interest from dealers across North America, Canada, and Europe. Just recently, we hosted several of these dealers at our Manhattan Beach headquarters for a presentation of the Fisker lineup vehicles. It was an exciting day looking into the strategic future of our company. We are carefully choosing our dealer partners. At the moment, we have signed up dealers who are family-owned and some who want to open multiple stores for us as we grow. One example is a dealer who is interested in 9 locations in North America. Another example is a European dealer group who is working on taking the entire country in Europe. That gives me great confidence that we will be able to set up a comprehensive, wide-reaching dealer network in a very short time. I expect we will keep signing up multiple dealers every week during the next few months and have a comprehensive dealer work with approximately 50 dealer locations in both North America and Europe by the second half of this year. As we recognize the EV market is growing at a slower pace, we want to be prepared. We have already initiated a strategy to make our company even more lean and competitive. Specifically, today, we announced a headcount reduction of approximately 15% of our workforce, mainly as a result of this shift from direct-to-consumer model to a dealer model, as well as streamlining the company in other areas. We recognize that success is not a straight line. We are bringing to the world the most sustainable electric vehicle. We knew this would be difficult, but we are in this for the long haul and are confident in our direction. We believe the Ocean platform is competitively priced and has several class-leading features, including a best-in-class range of 360 miles. But we also realize that the EV industry is going through a turbulent and unpredictable period, so we want to start this year with a more prudent plan. We currently anticipate delivering approximately 20,000 to 22,000 Oceans globally in 2024. We expect sales momentum to build throughout the year as our dealer footprint expands. We continue to bolster the breadth and depth of our management team with key executive leadership hirings of seasoned and experienced executives across departments, including financing, accounting, and marketing. I want to highlight one important development regarding our senior convertible notes. On January 21st, Fisker entered into a second amendment and waiver agreement with the holder of the 2025 senior convertible notes. Pursuant to this waiver, among other items, the company has obtained a release from the note holder relating to certain intellectual property belongings to Fisker upon the company entering into a certain commercial agreement with an automotive original equipment manufacturer, OEM. The waiver provides us with the increased flexibility to pursue strategic collaborations. Geeta will speak further on the convertible notes in her remarks. On the strategic front, Fisker is in negotiations with a large automaker for a potential transaction, which could include an investment in Fisker, joint development of one or more electric vehicle platforms, and North American manufacturing. The close of any transaction would be subject to satisfaction of important conditions, including completion of due diligence and negotiations and execution of appropriate definitive agreements. Turning to the Ocean, as mentioned earlier, we are proud to have delivered over 4,900 Fisker Ocean in 2023, and in the fourth quarter, we produced 4,789 vehicles and delivered 3,818 vehicles, an increase of approximately 250% from Q3 to Q4. In 2023, the Fisker Ocean won 6 different European awards in Germany, France, Denmark, and United Kingdom for Best Electric Vehicle, Best SUV, and Best Product Design. These accomplishments mark an important validation of the world-class product that our incredible talented team has developed. The Ocean OS 2.0 over-the-air update has already begun, which includes performance and powertrain improvements, enhancements for Solar Sky, improved energy management, and other user experience improvements. Additional OTA updates are planned throughout 2024. This shows how advanced and fully connected our Ocean vehicle is compared to most of our competitors. The Ocean is simply getting better and better, but I will have David King, our Chief Technology Officer, address our OTA strategy in more detail later. Let's talk about our future products. In 2023, we rolled out our vision for the future of Fisker products with the PEAR, a radical new segment-busting compact SUV designed to capture a large addressable market, and Alaska, a vehicle in a segment of its own. Now that several OEMs have postponed their EV programs, Alaska will sit in a unique market segment without any direct EV competitors due to its price and features. The Alaska is about the size of a Ford Ranger, but with luxuries, unique features, and bed sizes from 4.5 to 7.5 feet. Expected pricing at $45,900 and up. This is the next model we are concentrating on right now. We will only continue to invest in these programs if we complete a strategic collaboration or investment with an OEM. Sustainability. Turning to the topic of ESG and sustainability, a foundational pillar for our company. We have made a strategic move to confidently drive toward our goal of creating the most sustainable vehicles across all our programs. Our head of ESG now reports directly to our CTO. This enhances ESG alignment with engineering, design, and procurement, providing more immediate access to support innovation in low-impact materials and technology. Our sustainability team has the full support of these departments and continues to work with our materials engineers and design leaders that work directly and diligently to use the best quality and lowest impact materials and technology. Our carbon footprint lifecycle assessment, published in 2023, clearly showed our ability to lead the industry in sustainability. We're currently working on a system to incorporate ongoing carbon footprint analytics and target setting for sustainability that will promote verifiable radical advancements. As I look back on 2023 and ahead to the remainder of 2024, while I'm well aware that sentiment on EVs has seen brighter days and our own company has experienced growing pains, my confidence in the future of Fisker remains very strong. Through the hard work of our dedicated team, I know we will continue to grow the Fisker brand and expand in our current North American and European markets and beyond. I appreciate everyone for sticking with us on this journey towards a clean, sustainable mobility future for us all. I would now like to turn the call over to our Chief Technology Officer, David King.
Thank you, Henrik. A key focus for the Fisker engineering team in the last quarter has been to consolidate the hard work that went into launching the Ocean by optimizing quality and the customer experience, with a particular emphasis on software updates and feature introductions. Our strategy for the Ocean was to launch a global car with class-leading design and features, future-proofed hardware, and a fully connected, cyber-secure software platform that would allow us to continually improve the user experience, optimize driving performance, and introduce new features throughout the life of the car. The acclaim that the Ocean has received in the US and in Europe for its design, build quality, comfort, roominess, its range, and dynamic performance is testament to our successful delivery of the hardware. And our investment in our over-the-air capability to update software in so many of the vehicle's ECUs means we can respond quickly to early customer feedback and our own data analysis to roll out performance improvements, bug fixes, and some key features that were always planned to follow on shortly after the initial start of production. Delivering any new software manually or over the air is a big responsibility, and our testing and approval of component, system level, and vehicle level is accordingly rigorous. In order to add additional quality gates, a key process improvement introduced in Q4 is our 3-step OTA rollout that requires confirmation of successful updates in subsets of our internal and customer fleets before going full scale. We have also published a software roadmap to give better visibility of future upgrades, and our intention is to achieve a consistent monthly cadence of OTAs with at least 3 months rolling visibility of content. Looking back now on recently deployed updates, during November and December, we rolled out OS 1.10 and 1.11. The former included refinements to the low-speed regen braking performance over bumpy or slippery surfaces, along with 12-volt battery life improvements and bug fixes. The latter was focused on center screen response improvements, bug fixes, and the introduction of trip meters. Meanwhile, we've also been working hard to complete the testing on the much-anticipated OS 2.0 that has commenced customer rollout this week. OS 2.0 is our largest-scale OTA package to date, with updates to 12 ECUs to deliver new features such as auto hold, trailer sway mitigation, revised 45-55 front-rear torque split, further refinements to regen brake blending, solar sky charging meter, and OTA whilst plugged in, along with performance improvements such as improved cabin heating and defogging, revised audio tune for improved bass response, improved center screen response and Bluetooth stability, Part 1 of driver profiles, as well as a range of bug fixes and some enabling changes for future updates. It also includes the eagerly awaited key fob performance improvements and improved 12-volt battery management with a customer selectable energy saving mode that reduces overnight state of charge loss to below 1%. Our ability to make this scale of OTA update is currently very rare within the industry, and it places us in a very strong position to not only keep pace, but to set the pace in a rapidly changing industry where software increasingly defines the user experience. I've been driving an early release of OS 2.0 in my own Ocean for over a month now, covering more than 1,500 miles in that time, and I am delighted that the sum of all the improvements in this ambitious package is so clearly apparent in the noticeably more sophisticated driving experience and cleaner functionality, as well as fixing some irritations that I know will be much appreciated by our customers. Looking ahead, we are preparing now to release OS 2.1 in March and OS 2.2 in April, both of which will be smaller in scale than 2.0, while we finalize the next major feature upgrade, OS 3.0, in May. 2.1 will introduce Alexa, scheduled OTA, and further center screen enhancements, while OS 2.2 will add memory seats, some general calibration refinements, and a UK time zone fix. OS 3.0 is our next major OTA package, and we are in the late stages of testing and sign-off now. Feature content includes torque vectoring, one-pedal drive, further ESP refinements, hill descent control, new exterior sounds, and a suite of ADAS performance improvements and features, including active cruise control. Our vehicle engineering team is just back from a comprehensive winter test and sign-off trip in Sweden earlier this month, with excellent results on the Ice Lake, where even the front-wheel drive entry-level sport version gave an excellent account of itself. Away from ocean optimization, the Fisker team continues to work hard on the Alaska project. This exciting mid-size EV pickup will be packed with innovative features and will be uniquely placed in a segment of its own. All our learning and experience from the Ocean program is being embedded in the specifications and the engineering data to ensure a rapid and robust development phase. I'm very proud of what our team has accomplished thus far and excited for our customers to experience the features and upgrades we have in store for them. With that, I'll turn the call over to Geeta.
Thank you, David. I would like to begin by expressing my gratitude to the entire Fisker team, our suppliers, customers, and our shareholders who have supported us during a tough year. As Henrik has already said, 2023 was a much more challenging year than we anticipated. However, I can assure you that everyone at Fisker is working extremely hard around the clock. We have a highly differentiated product that truly deserves a higher level of customer awareness. As we roll out our dealer partnership strategy, we expect our sales to grow as consumers become more aware of our brand and have the ability to test drive and kick the tires. I will now review our preliminary fourth quarter full year results. Our fourth quarter revenue was $200.1 million, which was an increase of approximately $128 million from the third quarter. Higher revenues were driven by a significant increase in deliveries in the quarter to 3,818 units compared to 1,097 units in third quarter 2023. Our top line in the fourth quarter was reduced by $44.6 million that was allocated to deferred revenue accounts on our balance sheet. This relates to revenue we expect to realize in the future when additional services tied to certain option packages are performed, specifically related to ADAS, as well as certain vehicle features and functions that are updated over the air. A significant amount of this deferred revenue was also tied to a special package for Fisker Ocean One owners that was announced in October. That package included free vehicle infotainment upgrades, lifetime wireless connectivity, a warranty extension, free tire replacement, and a 1,000 charge point gift card, amongst other items. If we were to include the deferred revenue, our reported revenue would have been approximately $244.7 million, and our average selling price would have been more in line with analyst expectations. Our gross margin was negative 35% in the quarter. However, there were some non-recurring items in the cost of goods sold that negatively impacted margins, which includes an inventory valuation charge and a supplier capacity expense. On an adjusted basis, adding back the deferred revenue and removing the inventory charge and supplier capacity expense, our gross margin would have been positive. We reported a loss from operations in the quarter of $103 million. SG&A of $79.4 million increased sequentially, largely due to a rise in headcount during the quarter and higher professional fees. We quickly recognized we needed to pivot from direct sales to the dealer partnership model for the reasons that Hendrik has already described. At the end of the fourth quarter, with this pivot, we also needed to streamline company-wide operations. As a result, we expect to have a significant reduction in costs with respect to our real estate expenses and payroll through workforce reductions and related SG&A expenses. Furthermore, we expect to have additional reductions in R&D as the Ocean development is largely complete, and any new vehicle program spending will be tied to a strategic automaker collaboration. I will now address a couple of other items in the income statement. Other expense in the quarter was minus $10.5 million, largely due to a write-off for a loan we had previously made to a troubled supplier. We had negative $328.5 million adjustment to the fair value of our 2025 convertible notes in the fourth quarter. The primary driver of this was the result of a conversion feature which became available to the holder of the notes due to late filing of our Form 10-Q for the period ended September 30, 2023. Fisker amended the agreement with the note holder to remove this conversion feature when we file our 10-K with the SEC. As of February 29, approximately $237 million of the 2025 notes have been converted to equity, which has reduced the principal amount of 225 notes outstanding to $273 million from the initial aggregate principal amount of $510 million. After our annual 10-K is filed with the SEC, this conversion feature will cease to be available to the note holder, and the fair value of the notes will be reduced. Our net loss for the fourth quarter was $463.6 million, or $1.23 per share. For the full year 2023, we reported revenue of $272.9 million, which excludes the aforementioned $44.6 million of deferred revenue. Our reported gross profit was minus $102.9 million, or minus 38%. Our net loss for the year was $762 million, or minus $2.22 per share. We ended 2023 with $325.5 million in cash and cash equivalents and $70.5 million in restricted cash. Our cash position fluctuates based on a variety of factors. Since December 31, 2023, there has been a further reduction in our cash due to ongoing operations. Before we move on to our outlook for 2024, I'd like to address our liquidity situation and 10-K status. We expect our capital expenditures and working capital requirements to decrease in 2024 and beyond as we enter the second year of Ocean production. However, our business plan is highly dependent on the successful transition and execution from selling direct to customers to a new dealer partner model. Furthermore, to the extent our current resources are insufficient to satisfy our financial requirements over the next 12 months, we may need to seek additional equity or debt financing, and there can be no assurance that we will be successful in these efforts. If the financing is not available, or if the terms of financing are less desirable than we are expecting, we may be forced to decrease our planned level of investment in product development. We may have to scale back our operations, including headcount and production of the Ocean, which could have an adverse impact on our business and financial prospects. As a result, we expect to conclude there is substantial doubt about our ability to continue as a going concern when we file our 10-K with the SEC. To address potential liquidity issues, Fisker is already taking action. We are currently in discussion with an existing note holder about potentially making an additional investment in the company. The use of proceeds, if a transaction is consummated, is expected to be for general corporate purposes, vehicle production, and the ongoing transition to a dealer-focused sales model. In addition, as previously noted, Fisker intends to reduce its workforce by approximately 15%. Headcount reductions are predominantly related to change in sales strategy from direct to consumer and to a dealer partner model. In addition, We are streamlining operations, including reducing our physical footprint and overall expenses. Regarding our 10-K, Fisker is currently unable to file its annual report on Form 10-K for the year ended December 31, 2023, the 2023 Form 10-K, within the time period prescribed. Fisker needs additional time to finalize its consolidated financial statements and evaluation of disclosure controls and procedures. We currently expect to file the 2023 Form 10-K within the 15-day extension period provided under Rule 12b-25. Turning to our 2024 outlook, as Henrik stated, we expect to sell between 20,000 and 22,000 units in 2024. With the rollout of our dealer network underway, enhanced by the improvements and optimizations made to our outbound logistic operations, we believe we have a strategy to make this happen in the most efficient and financially prudent way. Importantly, the carrying value of completed vehicles in our inventory and prepaid raw materials at year-end was approximately $530 million. During the first half of 2024, we expect to generate cash from the sale of existing 2023 production vehicles that are largely paid for, supporting monetization of our balance sheet. In addition, we expect a higher than usual cash contribution from the Oceans produced and subsequently sold in the first half of 2024 as the company consumes raw materials that are already on its balance sheet, meaning they are already paid for. On a non-GAAP basis, spending for SG&A, R&D, and CapEx for 2024 is expected to be in the range of $320 to $390 million. Of this, SG&A is estimated to be $200 to $230 million, which is lower than our annualized fourth quarter run rate. R&D is estimated to be in the $60 to $80 million range, and CapEx is also estimated to be in the $60 to $80 million range. Together, this guidance strikes a balance between our asset-light model, our prudent investment plans, and streamlining the company's operations further to achieve our goals for 2024. Our estimated average selling price per vehicle will be in the range of $56,000 to $62,000 after taking into account import duties and dealer commissions. Reflecting the recent conversions of a portion of 2025 senior convertible notes to equity and stock-based compensation, 456,780,116 shares of the company's Class A common stock are outstanding as of February 26, 2024. In addition, there are 132,354,128 shares of Class B common stock outstanding for a combined total shares outstanding of 589,134,244 shares. We are now happy to answer your questions.
Okay, thanks. Thanks, Geeta. We're going to take 3 questions that we received from retail, and then we'll jump into Q&A from the analysts that are on the line. So the first retail question is, given the recent decline in the stock price, what is Fisker's next move to improve shareholder value, and how many new dealers does Fisker think it's going to gain with the dealer partner model?
Well, first, Fisker is intently focused on the transition from a direct-to-consumer sales model to a dealer partner model that I already talked about. Also, we have over 250 interested dealers both between North America and Europe. And obviously, we are going to convert a lot of those as fast as we can into signed-up dealers. We right now have 17 dealer locations already signed up between US and Europe, and we have already started taking invoices from dealers and actually start to ship the first cars to dealers today. And I expect by the end of this quarter, we will have 50 dealer locations between in US and in Europe, and I expect by the end of the year, we will have at least 100 dealer locations here in the US, and in Europe, probably about 60 dealer locations, 50 to 60.
Thanks, Henrik. All right, second question. We're going to be pretty limited in terms of what we're allowed to say, but the question was, have there been any serious merger discussions with large automakers?
Yes, we've already had many discussions with large OEM partners or potential partners, but one have progressed quite far. And we are now in the middle of negotiations with one large automaker for a potential transaction, which could include an investment in Fisker, joint development of one or more electric vehicle platforms, and North American manufacturing. The close of any transaction would be subject to satisfaction of important conditions, including completion of due diligence and negotiation and execution of appropriate definitive agreements.
Okay, and last question from retail. Fisker has missed its guidance and targets, and the recent 10Q miss from the third quarter set off a cascading event with the 2025 notes. And now we have an out-of-compliance letter with the New York Stock Exchange. What concrete steps are being taken to rebuild trust and to hit targets?
We recognize that our 2023 was a challenging year for the company. Our guidance and targets reflected our best estimate at the time, but as discussed, a number of unexpected challenges arose. We continue to bolster the breadth and depth of our management team with key executive leadership hirings, such as Angel, that are here today. And we will continue to hire people that we need and that will help the team here. We anticipate that a strategic partnership would help with a growth strategy and also, local manufacturing. Our dealer partner model is progressing well, and I expect that this is going to help accelerate our deliveries this year, in fact, starting already next month. And also, we are reducing our workforce by approximately 15%, which is, of course, part of pivoting to the new dealer model, that we don't need to have our internal salespeople, et cetera. But we also means that we will reduce our physical spaces that we have engaged with both in US and Europe. In fact, in Europe, we have some large dealer groups that are taking over some of our physical spaces, including the personnel. So that will help reduce costs. And then finally, we continue to be transparent and have already increased our updates and press releases.
Okay, thanks, Henrik. Operator, we can open the line for questions.
The floor is now open for your questions. To ask a question at this time, simply press star followed by the number 1 on your telephone keypad. We ask that you please limit yourself to one question. We'll now take a moment to compile our roster. Our first question comes from James Picariello with BNP Paribas. Please go ahead.
Hey guys, this is Jake on for James. First, just as you guys build out this dealer partnership model, how should investors think about the cadence for production deliveries through the year? As you scale this up and then try to convert some of the 5,000 some vehicles in inventory into cash.
Yeah, I can take that. This is Henrik. Thank you for the question. First of all, we don't have 5,000 vehicles in inventory because we have already sold vehicles, obviously, this year. Secondly, we have a very unique setup because we are having contract manufacturing. So versus maybe other startups, we don't have an issue producing cars. We can go and get even more cars produced if we wanted. So we wanted to start out with I would say, rather conservative prediction of actual deliveries and sales this year of 20,000 to 22,000. Should it turn out that we are doing much better, we can easily increase our production. That's not the issue. So I expect that with the dealer, what we are starting now with this rollout with the dealers, that will accelerate fairly quickly up in sales. But we do need to sign on dealers, and we do have to go through diligence with each dealer. In best case scenarios, it takes about a week to sign up a dealer from we get out their application to they're fully signed on and have ordered the first car. We have done a few a little quicker, like in 3 days. So it can actually go fairly quick. We do have to get licenses in certain areas, but for example, we already have got our license in California. We also have the license in Florida, just to give 2 examples. Those are 2 of our biggest markets. And we already have signed up dealers in across different other states. California, I expect, will be signed up with dealers pretty much all around California starting next week. And that's obviously the biggest market, and also starting next week, Florida as well. So I see a fairly quick sign up here in the U.S. Canada as well, we're in discussions already and have already identified dealers there or dealer groups. And in Europe, as I mentioned earlier, we actually have dealers who want to take dealer groups who wants to take entire countries, which means they're going to move very fast. And also, as I mentioned earlier, we do have our own facilities in each of the European countries. And some of these facilities, for example, where a dealer takes the entire country, they will actually take over the facility. So that, again, reduces cost, but it also means they immediately have facilities. One point I want to make as well, which is very important, is a lot of dealers have access to existing real estate, some because they built nice real estate during COVID for used cars, and the used car sales are not as hot as it used to be, so we're able to move into them immediately. Others is because they have left certain brands, and they therefore have fantastic-looking dealerships ready that we can move in immediately. So the dealers we are signing up right now, we are moving vehicles straight into their showrooms, putting up a new sign, and open for business.
Our next question comes from the line of Pavel Molchanov with Raymond James. Please go ahead.
Yeah, thanks for taking the question. Given the new distribution model as well as the new volume expectations, what kind of gross margin profile are you thinking for the sales mix right now?
Yeah, Pavel, hi, it's Geeta. I'll take the question. So we're not providing any gross margin guidance specifically for 2024, but we do expect to achieve on a non-GAAP basis single-digit margins, and we expect they go from mid to high single digits over time once our dealer model is fully rolled out. And we expect that a large part of the dealer margins will be offset by DTC costs that we incur today.
Our next question comes from the line of Dan Levy with Barclays. Please go ahead.
Hi. Thank you for taking the question. Maybe you can just talk to future product development. I think that you said right now you're working on some strategic developments or some strategic agreements with OEMs, but maybe you could just comment. I know you mentioned Alaska. Where does PEAR stand? And then maybe I could also squeeze one in as well. I know the distribution model is changing, but maybe you can comment on if there's backlog or just any indications of underlying demand. Thank you.
So as we say clearly in there, Dan, thanks for the question. We are not planning to start, external expenditure on our next projects until we have a strategic strategic OEM partnership in place. However, as we see in the market, we see that the biggest opportunity for growth and I think profitability and getting speed to market is with the Alaska. So the internal team are now focused on Alaska, and so that would be at this moment I see our next vehicle. But PEAR obviously would also be important as well because it's a very affordable vehicle, but we do have to prioritize. So that's how I would answer that. The second part of the question, can you just mention that again?
Just any indications on order book or demand. Yeah.
Yeah. So I think that we have to go with a very cautious prediction because we do see EV sort of negative sentiment, whether it's in media or generally talked about, and maybe for some companies. I would say that what we have seen with our dealers is the opposite. We have actually seen them being super excited. I think part of it is that the dealers have been sitting, looking over the fence for the last 15 years of startups selling direct. they have never really been able to participate in that sort of growth that's happened in the EV segment. They've only read about it. And now, for the first time, dealers in the U.S. specifically are able to get an American independent automaker's car into their dealership. And that gives them a whole new competitive edge they have never had before, where they actually can go out and start competing against the best-selling EV at the moment. And that obviously comes from an independent EV maker. So they're extremely excited to have our vehicle. Like I said, we already have dealers ordering the vehicles, and, dealer don't order one vehicle at the time. It's, can be 50, 100 or more, depending on how many locations they have. The advantage, I think, for us is that they're ordering multiple vehicles now, and they're going to sell them in areas where we have not been present. So I actually forecast a pretty good demand, specifically here in the U.S. because of this whole new thing that's happened, where for the first time these dealer groups, which, by the way, have multiple brands, but they have never had a product like ours before, and they're super excited about it.
Our next question comes from the line of Jeff Osborne with TD Cowen. Please go ahead.
Yeah, thank you. Henrik, two-part question. I was wondering if you could just give us a sense of how long you expect the due diligence process to last with the OEM. And then in the event that that doesn't come together, if Geeta could quantify what the OPEX and CAPEX commitment is in 2024 to prioritize the Alaska. I'd assume if an OEM partner doesn't pan out, that you would look to curtail that. So if you could get us a sense of, what might be the next steps in the unfortunate event if the partner doesn't manifest itself.
So first of all, we have been in diligence for many months. That's all I can say to that. And, we are looking to, obviously, wanting to close the deal as soon as we can, but I can only give the information we have already said about that at this point in time. I did say many, many months ago, I think 5 or 6 months ago, that we were in talk with multiple OEMs. And I think today we're really saying that we are now in the middle of negotiating with just one OEM, but obviously it's not like that started yesterday.
I think your second question is if that doesn't happen, then what do we do with Alaska? So at this point in time, the guidance we have given is ocean only. And as I mentioned in my script, that any programs which are beyond the ocean would only incur expenses if there's a strategic collaboration. So we would not be incurring any expenses on any vehicle programs in the absence of an OEM collaboration.
Our next question comes from the line of Chris Pierce with Needham. Please go ahead.
On the dealer side of the world, are there any minimum volumes that dealers have to kind of commit to join the program? And does that inform the $20,000 to $22,000 unit delivery guidance, or is that guidance informed by signing up more dealers? And then is there marketing that you guys have to do in those regions where those dealerships are, or is it on the dealer to market and sell the cars kind of on their own?
Thank you for asking the question. I'll take that. So we do have on our public investor deck, we have shared with our what our dealer partner model looks like. And of course, in Europe, we have a hybrid model. We don't have a franchise model like we have in the US or in Canada. We are following very typical guidelines that sort of the NADA framework suggests. We are obviously looking at a certain minimum inventory, and typically those are 30 to 45 days, because you want to make sure that you're supplying our dealer partners with enough inventory. Given the fact that we've had limited exposure of our product, we expect that we will be able to get multiple points, and we will be able to supply inventory again for 30 to sort of 45 days. That's typically, again, something standard in the industry, nothing unique in our model.
And then to the marketing point, obviously the dealers, they do a lot of their own local marketing. We do have a co-op program where we will support them, but they have to spend money on marketing. And obviously some of these dealers are in very prominent locations, and they for example, will go to the local malls and display the vehicles or do events. We have a dealer right now in Atlanta that's actually doing an event this weekend already, and we are helping out there with him, but he's really, obviously selling the vehicles there. So I would say, I think getting out, dealers almost in every state in America. I mean, sometimes we forget how big America is, but it's huge. And, just for now, we have been able to sell thousands of cars out of literally 2 locations where people could see the vehicle, New York and Los Angeles. So the fact we already have another 17 locations between U.S. and Europe is already, we have gotten 3 times as much in the U.S. alone of what we used to have. So I see that just being able to go down to your local dealership, see the vehicle, and try it out. And I also want to say, the dealer groups that we pick, we are not picking, people who's never sold a car. We are concentrating around fairly large family-owned dealerships. I mean, there's not everyone that's like that, but that's sort of what we're seeing at the moment. So, for example, Mills Auto that we signed up, I believe he has around 30 dealerships, and I think he has around 10 brands. So, and a lot of these dealers have multiple brands in the same location. So when you go down and buy or look at a certain brand, you will go down, you will see the Fisker there as well. And that's the same in Europe. When you go down, there's maybe 5 or 6 brands right there owned by the same dealer. So we get automatic exposure that we've never had before. I mean, there is still a large amount of the population, probably the majority, both in the US and Europe, that's never even heard about Fisker. So building the brand is something the dealer's going to be part of. And that's something which I think is going to accelerate with appointing these dealers.
Our next question comes from the line of Mark Delaney with Goldman Sachs. Please go ahead.
Yes, good afternoon. Thank you for taking my question. Could you provide more color on your expectation for free cash flow this year based on the financial scenario outlined of 20 to 22,000 deliveries, and how cash flow might vary in the first half relative to the second half of the year, given the focus you mentioned about working capital? Thanks.
Yeah, so I think, just in terms of working capital, I mean, we, as we outlined, have a very rich balance sheet with respect to finished goods and also prepaid materials. Our expectation is that we expect to free up significant cash flow from selling the finished goods. And as I mentioned earlier in my script, that we are also using this prepaid inventory. So for every vehicle we build and we sell, we have a higher than usual cash contribution from vehicles that are sold in the first half of 2024. So in terms of the guidance that I mentioned earlier, which is sort of $320 to $390 million, what we expect is the first half to contribute towards our working capital needs to support the goals of the business.
Our next question comes from the line of Shreyas Patil with Wolfe Research. Please go ahead.
Hey, thanks a lot for taking my question. So I just wanted to better understand where your relationship is now with Foxconn, if the case is now that you're essentially deferring development on the PEAR program. Does that have any impact as far as your agreement with them? And then also, why aren't they investing in Fisker or helping to contribute, since you already have an existing relationship with them? Why do you feel the need to have to go to another OEM? Thank you.
Thank you for the question. I would not really consider Foxconn an OEM, first of all. Secondly, as we are in the middle of negotiation with a large OEM, I think that we as a company can really only concentrate and only want to concentrate on one strategic partner. And we obviously have to look at who offers the best deal, who is the best for us. And that's the group right now we're negotiating with.
I just want to add to that, Shreyas, that in August, when we had a Product Vision Day, the goal of Product Vision Day was to showcase the capabilities in terms of our platforms and in terms of the fact that Ocean has the ability to create a very exciting product portfolio, the Alaska, and PEAR being a very exciting high volume product. And as a result of that, as we publicly said, that we were talking to various automakers for sharing platforms. And the reason for that is that there's a large number of automakers who are probably behind, or they don't have that focus in terms of the focus we've had for EV development. It saves time, saves cost, and where we've been focusing on in talking to automakers is really to share the technology, the investments we've made to reduce time to market, to have a joint product portfolio based on the Ocean platform. And that's the differentiator where Henrik said Foxconn is obviously not an automaker.
Well, there you have it. The call has ended abruptly. We were just watching the call and listening, and all of a sudden Gita was talking and it died. I'm statusing it over here on the left. If Fisker re-enables the broadcast, we'll go ahead and play it. But as of right now, the broadcast ended prematurely, it looks like. How are you guys tonight?
Excellent.
Doing well.
Excellent. All right. So, geez, what a big earnings release in my opinion. Geez, I think a lot of people are wondering what's going on, and we got an update. It's not the update probably that everybody expected. I'll start off by disclosing I am a Fisker shareholder. I believe Matt and Mike also are Fisker shareholders. And the stock right now is getting hammered. It's plummeting, I should say, in the extended hours trading. It closed today at 72, almost 73 cents. It's currently trading at just under 46 cents, down 26 cents, 27 cents, and that would be almost a 37% drop in the extended hours. So it's getting, decimated, if you will. That's probably the biggest single day drop I've seen since I started following the stock, since the company ended up merging with the Spartan Energy specialty purpose acquisition company. So that's quite interesting. So thanks everybody for joining us if you're following us along on YouTube. And we're going to go ahead and talk about our takeaways from the call that ended prematurely. If you were listening to it, we ended up hearing Gita talk about, she was answering a question from the analyst, and the call ended. So, all right, let's go ahead and do this. Matt and Mike, thanks for joining me tonight. I invited some of the other guys as well. They may show up, who knows? But thanks for hanging out tonight. And I have a whole bunch of notes written down. What were each of your top three things? Let's start with the top three takeaways that each of you had. And I have mine jotted down, but let's hear from you guys. What were some of your, let's say, top three takeaways from today's call, from what we heard?
Matt, you can go first.
All right. I think the biggest thing is, and we all know this, is the dealership pivot and expansion, which I consider a good thing. As far as the second, I would say, I guess the news of the Alaska over the PEAR is kind of big news to me. But it makes sense because Alaska is based on the Ocean platform. There's not a huge amount of change that needs to be done to bring it to market compared to the PEAR, which is a whole new platform. The last thing is the lack of, I guess, commenting on liquidity is kind of shocking to me. And that's the three big things I got out of this.
What about you, Mike? Thanks for sharing that.
Yeah, the number one thing that I just immediately started taking notes on is as soon as he said he really emphasized one large OEM. And, I've been kind of hoping and praying on this one. I can't wait for us to dig into it. There's a few of us behind the scenes talking about this. And I think he gave away a couple things. One of those Matt just brought up, the Alaska. When you talk about North America, that honestly, you have the truck is still very popular in North America. And then it's on the Ocean platform. So you're saving money and you're also potentially garnering a lot of interest. So I think that's a win-win there. So that stuck with me. Dr. Gita mentioned quite a bit into the financial realm. I wasn't too shocked by that. I think for a company for a first year surviving this turbulent EV side, I took note of it, but I wasn't really shocked. And then, like you said, Henrik's kind of just vague, going back, tailoring it back around. So, really, honestly, it was just those two things for me. But I keep spinning on that OEM.
Yeah. So that was one of mine as well. First off, I read the press release today, and I thought, oh my God, what a disaster. I thought it was a disaster of a press release because it's specifically first time they've ever done this. They had a whole paragraph that basically started with the heading, substantial doubt about Fisker's ability to continue as a growing concern. And that paragraph stood out to me as the red flag or the biggest takeaway of the press release. That to me was kind of a shocker, that they had a lot less cash on the balance sheet than what I had expected based on what they had reported with their business updates over the last few months. So there was some financial, magic, if you will, with that note holder and then repricing the notes. That apparently may have used up some of the cash that was on the balance sheet. I'm not sure, but the amount of capital on their balance sheet, cash equivalents, was down a lot more than I had thought. I think it's been pretty obvious to me that they're going to need to raise capital from probably over the last 4 months, and it's very apparent by the press release and from what Gita obviously shared on her prepared remarks. The biggest takeaway, I would say, from the actual earnings call, hearing Henrik and Gita speak, as well as the CTO, who is the second time we've heard from him, I'd say my biggest takeaway with financial wise, again, Fisker needs more time to file their 10K. And they are gonna, it sounds like, request an extension or 15-day extension, and they expect. I heard them say they will file within the 15 days, but let's say they expect to file within those 15 days. That was kind of the stumbling block that made, I believe, the share price go from $5 to $6 a share down to sub $1, and now the company has to play their hand of their hand that's been dealt to them and try to work their way out of this financial squeeze, if you will, or financial situation that they've put themselves in, really. So if they would have filed on time, and that was like going back to last quarter, we wouldn't be in the situation financially that we're in now, because there was so many forcing factors that drove the stock price lower after that miss of their 10K, one of which that we all know from the business updates Fisker's been providing over the last few months was the note holder. And they talked about that note holder again and again on this call, how they were selling shares in the open market, right? They're converting their debt to equity. And I didn't quite get the number. I heard a couple of different numbers about how much more that debt holder has liquidated or converted. I want to say it was 273 million outstanding on the convertible note. I don't know off the top of my head how much additional they have liquidated. I want to say it's around 75 million. That's a guesstimate, but they certainly have been liquidating since the update on January 20th or thereabouts. So that was one big takeaway that I had. The other takeaway that I had, which I thought was actually kind of a good thing, to your point, Matt, the dealer partnership model. We're going to end up getting a lot of dealers signing on, both in our state of California and, Mike, your state of Florida, it sounds like, over the next week or so. There's a bunch of dealers, I guess. These were the two biggest markets, Henrik said, were California and Florida, which is very positive. I can see that driving around town here. I literally see, if I go out and drive my Fisker Ocean or my wife's car for the day, I see always one Fisker Ocean every day. The market here in Southern California is very strong for Fisker, and we're going to start seeing dealers. I thought California would have been the first dealer partnership, but it was actually Maryland over in your neck of the woods, or not quite, but closer to your neck of the woods, Matt. So
a little north, yeah.
Yeah, hopefully. But I do think we're going to see something in Jacksonville. I did see, we did get one update around your neck of the woods, Mike, with regards to a dealer. So that's positive. That wasn't on this call, but that was earlier this week.
Yeah, 7 miles from me.
Oh, that's great. That's really good.
Yeah.
The other thing that I thought was kind of interesting as far as one of my top 3 takeaways is the company said that the gross margins remained at 35% for each vehicle that they sell. However, once they move over to from the direct to consumer model to the dealer partnership model, and they're all in on the dealership partner model, at least here in the United States, and the hybrid over in Canada, they should start seeing single-digit positive margins on the sale of each Fisker Ocean. And don't forget, they're no longer selling to the consumer like me, Mike, or Matt. They're selling to directly to the dealership. So they're selling them under what Fisker has as the pricing on their website, so that there's a margin a little bit for Fisker and a little bit for the dealer. So we should see improvement on the margin. We should see it come down from 35% to a positive single digits, moving to double digits, Gita mentioned. And that would be primarily due to offsetting some of the DTC costs that we've seen that will be going away due to dealers having these on their lots, selling directly in the communities that they work in. So those were the 3 takeaways that I had. I had like the biggest takeaways, but I have a whole page of notes, some interesting tidbits. One of these was, this is going to be the first time we see a reduction of headcount at Fisker. Fisker's been touting each earnings call. They've been giving an update at least on headcount, and we've seen an increase up until this point. We're going to see a 15% reduction. Last I recall, there was well over 1,000 Fisker employees, and that would mean at least 150 jobs will be unfortunately eliminated at Fisker. So it's always sucks when there is a reduction in headcount. In my working career, I've been a part of them, and it's never a fun time wondering, am I going to be the one that gets laid off? And at one of my first major jobs that I had, unfortunately, after 5.5 years of serving at that company, was laid off. And that is never a fun thing, but that's the first time we've heard of a reduction of headcount at Fisker as the company transitions to a dealership model. So it's a little
I just want to add to that,
please
Sean.
do.
So I'm wondering how much of, say, those 150 employees are directly related to, I guess, marketing or sales that the dealerships are going to be, taking over on that. And another thing I had is he had a question about marketing, and I do see that the local dealers are going to be doing advertising, on a local basis.
That's right.
And I still foresee Fisker doing national level or on, their social media and all that. I think is still going to continue.
I would have to agree with you. I think I know a lot of people give Fisker flack for their social media and their marketing that they do on those platforms. I personally think it's really good compared to some of the other EV brands that I follow. And if you don't follow any other EV brands and you just look at Fisker and go, geez, they don't do a good job, they actually do pretty good. And they do engage customers, and you do see them use those social media posts as ads across those social media platforms. So I think they do a good job, but to your point, Matt, they're going to continue to do that, and I believe they'll continue to do that. But we will see local advertising, and that will probably be, local potentially television ads. It could be local newspaper ads. It could be local Google AdWords ads. Who knows? Local, online advertising to drive people into dealerships. That's what dealerships know, right? They know local advertising. So that was one breakout session I actually listened to over at the NADA trade show. It had to do with advertising and trying to drive traffic to dealerships. And I listened to that. That was actually pretty interesting. So we could dive into that at a future time if interested. But another thing that I thought was interesting was the deferred revenue. I didn't understand why they deferred revenue. I know they touched on it briefly. I don't know if that was like, it was like 200 something million. And then they ended up saying, hey, we have, I don't know, what was it, 50 something million that they were going to, I think 40 something million that they were going to defer to a future time. And that.
No detail though.
Yeah, I didn't catch that.
I don't know what that was. Yeah, there was no explanation.
Yeah, is that like the warranty, and they kind of hold that money aside? I wasn't clear on that.
Yeah.
It almost sounded like they were talking about how some of that money was reserved for the Fisker Ocean 1 benefits, which
the benefits.
Yes, because she mentioned all the benefits, and she said if we wouldn't have counted that, then it would have been 242 million, which was closer to expectation. I mean, the expectation was what, 323?
It was high, very high. Yeah, every article we look at will say Fisker, missed the revenue, even though people who were following closely knew it was going to be much lower than what analysts had estimated. But those analysts maybe project their revenue, years out, and they don't bother to change them for God knows what reason. But yeah, they came in. They said if they didn't defer the revenue, I think it was 244.7 million.
Yes,
and that was quite high, and I think I projected somewhere around, with guesstimates based on the total number of cars that they had delivered, somewhere around 250 million. So a little bit shy on what I projected. So maybe the average selling price was lower than what I had used. But I think biggest, maybe I should have mentioned this, and you mentioned this, Mike. So the biggest takeaway you had was the OEM partnership, the potential partnership with OEM. And I think one thing Henrik mentioned, which was kind of interesting, was he said when the analyst came on and asked the question, like, how long could it potentially take? And Henrik said, well, we've been working on this now for a couple of months. We mentioned like 5 months ago, which they did. I think I looked into the article that I wrote about it. Reuters broke that they were talking to multiple automotive companies about doing some sort of a partnership, whether it was a strategic investment, collaborating on an EV, doing EV manufacturing, whatever it was. But the thing that I thought was an interesting takeaway, no mention in the press release about Foxconn, no mention in the prepared remarks about Foxconn until we got to the Q&A. In the Q&A, Henrik Fisker specifically said he doesn't consider Foxconn an OEM.
There you go.
So I think that tells me, well, they're not negotiating. they're at least not negotiating a strategic. Yeah, who knows what they're doing with Foxconn? Maybe nothing at this point. It's hard to tell. But the OEM is not Foxconn. That's what we know, right? You know, who could it be? Your guess is as good as mine. We could speculate to that, you know, till for the next hour or two on who it could be.
I want to add one thing on
yeah,
Fox.
go for it. Yeah, please do.
You know, since the Lordstown Motors, debacle,
yeah,
Foxconn has this whole factory that they own, and they want to have other companies. You know, they want to do like the same thing. They want to create the platform and sell it for other OEMs, and I don't know why this is not working out. I don't know if there's some sticking point on money or what, but you know, they have the same thing that Magna is doing, you know, create vehicles for other manufacturers that, it baffles me. I really would like to know what's going on with that.
Foxconn seems to be absolutely silent on this too. Over the last couple months, there's nothing coming out of, you know, from them. There's nothing coming from Lordstown. It's when Henrik said that about Foxconn, you know, saying that he doesn't consider them an OEM, which I understand. It's almost a little bit of shade. It's like, is the deal still on the table for the PEAR, or is that, you know, crushed? But
we do know this, and this was new news. It wasn't news to me that the Alaska is ahead of the PEAR. Henrik said that when I chatted with him, on without having a video. We chatted with the video, but I didn't record it. But he did mention Alaska before PEAR. I knew that. That was no news to me. But what was news is they're not investing in any new projects until a strategic partner is secured. That is new news to me, at least. And I think that's good because that helps preserve cash. And I think we had, let's see here. How much cash do we have on hand now? $395.9 million as of the end of last year, December 31st, 2023.
That's not a lot.
Yeah, that's, I wish I could pull up the information super quick.
And then 2 months less now, so. Yeah.
And then 2 months less now. The Q3 earnings, if I can pull them up real quick. I think I wrote down how much cash was on the balance sheet then. Let's see if I can figure that out here real quick. I think it was $625 million previously, last quarter. So that would have been Q3 2023, which was announced on November 13th. So there was a delay there, obviously. It was $625 million, excluding $50 million in VAT. So we dropped to $395.9 million. But I did read somewhere that operations, let's see here, it was like about $100 million from operations. So I think it said $103.5 million in as a loss from operations. So I think there was some of that financial, I want to say magicry, which is not a word, but some sort of financial waving the hand and doing whatever they do with that note holder. There's something going on with that note holder where the cash came down. I don't know what it is, don't understand it, but there's a lot less cash than I thought there would be because they ended up selling so many cars that I thought that would have added to the cash balance of the $625 million or whatever they had for Q3, less operations, right? So for some reason, I thought there was going to be a lot more cash on hand, but there isn't. It is what it is. Who knows? Maybe we'll get some more information on that at some future time. Probably won't, but maybe we will. Or maybe one of the analysts will come out and tell us how they think about it because they're obviously smarter than us. Or I'll take that back. They're smarter than me. No disrespect to you two.
I'll join your boat.
So the stock's trading down 34% right now. It's hit a low of 44 cents today. Worst day I've seen as a Fisker shareholder. Another all-time low. It'll be interesting to see what happens tomorrow. Maybe Fisker will come out with some other update we haven't heard about, but I don't think so. I think it's nose to the grindstone, get these dealers onboarded. And as they do that, we didn't hear this either. At least I didn't hear anything of it. We didn't hear anything about a reverse stock split. That's kind of a big, I don't know, it's not necessarily, that's another financial engineering thing in order to satisfy stock exchange requirements, whether you're on the NYSE or the NASDAQ. Fisker's on the NYSE, but to satisfy stock exchange requirements, you have to trade above $1, you have to trade so much volume, you have to have certain market cap, all sorts of stuff. And Fisker has most of the requirements met, except for the share price, which is going to be opening up, looks like tomorrow, potentially at an all-time low. Will it stay there? Everyone's guess is as good as ours, but it is what it is. We're dealing with a stock price now of sub 50 cents, and Fisker may have to do that reverse stock split if they can't get the share price up. I think there was a lot of people who were expecting today's data dump from Fisker to hopefully accelerate the share price in the up and to the right hand direction, but it doesn't look to be the case today. Today is what it is. Tomorrow's another day, and Fisker has to keep working hard, as they know. It's not going to be an easy one. It's going to be a long journey, and Henrik said at the beginning of his call, they're in it for the long haul. So if you're a Fisker shareholder, strap in, and it's certainly been a rocket ride, up and down, and hopefully we'll level out soon, and hopefully start moving up and to the right like we saw over the last few days. But that's where we are share-wise. Here we go. I got another thing that I thought was interesting. We didn't end up getting talking about the dealer network here real quick. The dealer partner model, they said that they are going to produce or deliver, well, let's see here, I'm going to get the verbiage right. It was like 20,000 to 22,000 vehicles in 2024 is what they're looking for as far as sales targets go. Those are going to be directly to, most likely most of those are going to be directly to the dealerships or the dealer network that they're building out. We heard that some of the real estate that Fisker has is going to be taken over by some of these dealer partners. In addition, the employees, right? So they're going to be, there's employees that are sales representatives, there's service representatives that are at some of these existing Center Plus locations, and those sound like they could be sold off to some of the dealer partners, which is kind of interesting. And then on top of that, we end up learning that each dealer will purchase enough inventory for 30 to 45 days. So we don't know, I've never been in the dealership business. I don't know what 30 to 45 days of inventory looks like. However, Mills Automotive Group, and you guys may remember the exact number, but I want to say it was like 225 or 250 vehicles purchased, somewhere in there. So that would put us somewhere around, and they wanted to do 3 locations. So it would put us somewhere around 75 vehicles per lot, is a guess. So that's.
I just want to add, Sean, that sounds like a good number. I was just at the VinFast dealership. The first one to open in the country was in Raleigh, and they had 70 vehicles on their opening, grand opening. So that sounds about right.
Okay. And hey, speaking of VinFast, I went and saw a VinFast last night. I ended up going to our UTC Westfield Mall, not for looking at the VinFast. We were actually going for a new bed, which has nothing to do with cars. But while we were there, we wanted to go walk around. We walked around, and we went to the Tesla dealership, or the Tesla store, as well as the VinFast store. Those were on the way to where we were headed. And I got to see a VinFast VF8, I think it was, what we saw. And they said some funny stuff that kind of puts things into perspective of how well Fisker is actually doing in comparison to that particular brand. I don't think that brand is doing all too well based on what I've read and what I was told last night, but they had like maybe 100 sales in all of Southern California, from what I was told by the sales rep, which is not very many, where we had these 50 Fisker Oceans show up at the meetup just in San Diego. And I want to say there's several hundred just in San Diego, not to think, Orange County's got loads, Los Angeles has tons. Go up to the Bay Area, they have, tons up there as well. So I think Fisker's blowing the doors off of VinFast for whatever that's worth. But the car was okay. I got in, it smelled leather. I could smell leather. I was like, it's definitely not a sustainable vegan leather. But it was a nice car. I find my Fisker Ocean much higher quality. But it's a good car, and they were offering it for $250 on lease. Wow, that's cheap. $250 for an EV on lease. Pretty amazing. And that deal ends today. So who knows if they extend it. So nobody can get that, obviously, unless they rush out to their very few VinFast dealers to pick it up. We also saw, tangent, not Fisker related, but I ended up seeing the Cybertruck. Can't go in it, can't touch it, behind a velvet rope. So kind of interesting. See a few driving around town, and it was a surprise to us to see one there. And then also saw that Optimus robot in the window. That was kind of the draw to go in the store. So that was kind of interesting. But the most interesting highlight was testing out new beds at the mall. Okay, back to Fisker and the dealership model. 225 is the number we got from Mills Auto Group, or somewhere there, about 75 per location. So I'm going to start using that as my benchmark for the 30 to 45 days of inventory. Henrik did mention 13 dealer partners are now onboarded. That, I believe, is one more than we heard about yesterday. We heard about 12 yesterday, if I recall. So we've gotten one more. Who it is, I have no clue. And if that's in the US or if that is in Europe. But if we do 75 times 13, what does that give us? It gives us about 975 vehicles sold to dealers so far at some point. Kind of interesting if you think about it. So not selling to direct to consumer, even though I think there are still some direct to consumer sales going on in states where they're not live yet with dealers, because I keep getting emails about purchasing my Fisker Ocean Sport, or if I want to upgrade to an Ultra or Extreme. Not doing that yet because I don't have enough room in our garage, but maybe some point we'll get another Fisker Ocean. But we need to see kind of how things shake out here, as I'm guessing a lot of other potential prospective owners are kind of in the same boat as us. Okay, let's talk about this. This is a good one for people who own a Fisker Ocean. Maybe this is probably the highest number of people we've had tune in to one of these live shows. Lo and behold, it's probably because everyone wanted to hear Henrik and Gita and David King talk about the Fisker Ocean. But one thing that I think was kind of interesting was talking about the product. We got David King talking about product, a product-focused CTO, Chief Technology Officer. We do know that Fisker Ocean OS 2.0 is now rolling out. Have either of you gotten to the first part of 2.0 on your?
No, I spoke to a tech the other day, and he said that it would be about 2 days for my vehicle.
Okay, but they are rolling out. They definitely are rolling out. We got our first part installed yesterday. However, we don't see the actual Ocean OS 2.0 part 1 of 3. So I don't think it was successful on our car. Who knows? However, breaking news for those following our Fisker journey. I just received the second email that says new software update available for my Fisker Ocean OS 2.0 part 2 of 3. And it says in that email, if you haven't already, you should have received an opt-in notification that states your vehicle is ready to install part 2 of 3. You can accept this opt-in notification directly from your vehicle's central touchscreen. And it basically was like, hey, I'm ready for the second installment of 2.0. So that's the next thing I'm going to do when we get off our call tonight. We're going to turn this into an all things Fisker, probably not, but I'm going to go down there and see if it works, because I would love to have the automatic hold on my car, the hill hold or whatever it's being called right now. So that would be kind of like I don't know if that's an upgrade, but it certainly can't hurt, as I live on a very steep hill, so it would probably be useful. But yeah, we heard about 2.0 rolling out. 3.0 is now expected in the May timeframe. If I recall, that previously was the March timeframe was the 3.0, and it's been pushed to May. But we will end up getting dot releases, so 2.1, 2.2 in the coming months of March, and March is obviously tomorrow, and then in April. So those will be minor changes. David King, the CTO, talked about those briefly, but 3.0 will include, it sounded like, one pedal driving and then also Alexa voice. So it's if anyone has an Alexa, hey Alexa, you know, what's Fisker's stock price right now? Ooh, that probably won't be a fun one to hear. But for those that have this on, you may have had Alexa Go. But Alexa's enabled in my car. Not much works with it, but I can talk to her. She talks back. A few commands work, but nothing too exciting yet. So I'm still excited for the rollout of the software. I think 2.0 will be a big one, especially as more and more people will begin test driving Fisker Oceans locally at their Fisker partner dealership or Fisker dealership. So that's really good. Did you guys catch anything about the product rollouts that may be of interest to anybody watching?
Specifically concerning that, no.
Okay. Yeah. So, yeah. Do you have anything else you want to add about the product before we go on to the next one? I think the next one that I had listed on my chart was around operations and things of that sort. I followed the stream, and there was some crazy comments in the stream, as there always is. I had to remove a few of them, but there was a lot of people thinking that Fisker had potentially a new chief operating officer, and we didn't hear anything about a chief operating officer. Dita still remains as the CFO and COO for Fisker. I don't have any issues with that, but we do know that more help is probably better for Fisker. Yeah. They did get a dedicated COO that probably allows her to focus more on the CFO role. But that's, you know, not up to me or any of us. That's something that they have to figure out at Fisker. But operations-wise, the one thing I didn't hear, we did hear a little bit about the dealer network. And when I think of operations, I think of deliveries and I think of service. And deliveries are going to end up being now, from what I've seen on the Fiskerati forum, there's no longer picking up Fisker Oceans at local Center Plus locations. From what I've seen, everything now is a delivery. The Fiskers kind of moved back to, they started off as, hey, we're going to deliver it to you. And then they introduced, hey, you can come pick it up, to kind of speed things up. And now we're kind of back to the, hey, we're going to deliver it to you, while direct to consumer is still in the picture here, at least here in the United States. And then now deliveries are going to be not to consumer, but directly to dealerships. And once they're at dealerships, there's no longer deliver to my house here in the United States. It's go to the dealer, drive the vehicle, like the vehicle, purchase the vehicle, finance the vehicle, pay cash for the vehicle, whatever it is. Here's the keys to the vehicle, drive the vehicle home from the lot. So that's one thing. Wow, there's some, that's bizarre. How did that happen? What the heck is going on? I did not touch.
Well, you must have said something crazy.
That is nuts. I did not see that. I'm not touching anything, but I just saw fireworks. Somebody has hacked our channel or something. That was bizarre. Or I said something that fireworks just showed up on the screen for those that are just listening to this. As a background too. But here's something else that we didn't hear about, which I thought we would hear a little bit more about. This was service. I have heard from people on the forum that service is improving. People are getting a lot, you know, it's not perfect by any means. People still have a hard time. They're on hold all the time with Fisker, but people are getting service calls. People are getting vents replaced. People are getting software issues looked at. That is happening, and I was hoping to hear a little bit more about service with dealers. We didn't hear anything about that. At least I didn't. I missed it. I'm going to have to listen to the call again, as I always have to do, because I'm in the moment taking notes, and I probably.
I didn't hear anything on that.
Yeah.
So.
But like,
pretty
that's
important.
a selling point. Like that to me is a huge selling point of buying a Fisker Ocean is I can take it to my local dealer, assuming I get a local dealer here in San Diego. I would imagine I do. It sounds based on, I'm going to infer that that Vista dealership is probably going to become owned by a new dealer partner at some point, and the employees that are there may end up becoming the employees of that dealer partner. That's just a guess. So I love the guys over there at that dealership at the Center Plus, and I'll hopefully continue to be able to interact with them as that may get transitioned to a maybe the first dealership here in San Diego County. So that'll be exciting. But service is a big one. I was hoping to hear more about that. That's what I think of when I think of operations, at least from a consumer standpoint of me taking my vehicle in to go get service. And how is it, what's that experience like working with dealers? So hopefully we hear more about that.
With the Bull Auto Sales, that's the one that they're mentioning for New Jersey and Jacksonville.
Yeah.
So it's a state-of-the-art center. They are going to handle both service and sales. And interestingly enough, I did some research on this. Several of these dealer partners are also partnered with Karma Automotive.
Okay. Yeah, I did see something about a Karma. Oh, Matt, you're on mute, by the way, or maybe you're not. Or I'm sorry.
Yeah, I'm on mute, but
sorry. No, sorry. I just clicked over to the YouTube stream to look at the comments, and I saw you talking, but I didn't hear you, and I was like, oh, you're on mute. Sorry about that. My bad.
I like that the two are still, despite being a different company now, that they're still tied together, because that'll be great having somewhat of a little bit of that heritage design that Henrik first started with in the same building as the Ocean. And for Jacksonville, we are central to so much in terms of Georgia, South Carolina, Florida. We're 1 million square feet capita, largest city in Florida.
Yeah.
So I think it's going to be huge. And honestly, transitioning to a service minded dealership versus the Firestone, I think that's better direction. I know they just stopped talking about Firestone, but I think the dealership is a better model.
And what's interesting about the car, like who knows if, I don't know how Karma's business works at all, but I just went to their website and they must have 20, I'm going to go with 20. I'm just looking at a map here, 20 locations here in North America. It's probably more than that. Maybe it's 25. And it looks like they have maybe a dozen in Europe. I don't know if all those are independently operated, like how Fisker's kind of going with dealer partners. It sounds like that may be the case with the partnership with the Fisker partner that's going to be in Indianapolis. So that might be an easy one, right? Henrik may already have relationships with a lot of those potential dealers, and if they're selling, the Karma Automotive product, maybe it's something that they can easily move into the Fisker Ocean to start. But the Fisker Ocean is by far and away the company's focus at this point until a strategic deal happens, and they then move to start manufacturing the Fisker Alaska, which will be ahead of the PEAR. There's so much. I'm going to go to the earnings release now, the actual press release, because there was so much in there that I've read so very quickly right before I hit the publish button on the article that I wrote ahead of the earnings call. So I need to read that again. But trying to make sense of that in 30 minutes before the call was kind of hard. But I think I pulled out what I thought were the most important things. Fisker ended the year last year with just under 5,000 sales of the Fisker Ocean, so 4,923. That's a lot more than I thought they were going to do after we kind of saw the stumbling out of the gates with deliveries. Deliveries were kind of a challenging one, and the company ended up coming out of the gates saying 2023 was a challenging year for us. Certainly was. It certainly was a challenging year, and the focus this year, if we're looking forward, the windshield's bigger than the rearview mirror, so we're looking forward. And this year, it sounds like it's the year of brand awareness, and brand awareness is going to come through these dealer partnerships. So there's a lot. I would say it's a bet the farm on dealer partnerships. That was kind of my takeaway from reading the press release. Is we're going all in on dealer partnerships. We're done with direct to consumer here in the United States, make it or break it with the dealer partners. And I had the expectation that it wasn't going to be, hey, we have interest from 250 dealer partners and we signed up 200 or 50 dealer partners in month one. I knew it wasn't going to be smooth sailing like that. It wasn't going to be easy peasy. It's going to take time to educate these dealers, right? People just expressed interest and now they have to kick the tires. They might want to learn all about the company. They want to learn all about the Ocean, future plans for the product roadmap, and then they have to come up with the financial commitment in order to buy 30 to 45 days worth of inventory. So it's not easy to just come up with that probably amount of money to say, hey, I'm going to just move into the Fisker selling, the Fisker business, Fisker EV business overnight. But it's hopeful. I'm hopeful, and I think the company made good progress. It's a positive that they've gotten 13 that we learned signed up, and I think we will get. Their goal was 50 partners here in the United States this year, and we have 13. So we're what is that, a quarter of the way for the United States, at least I guess that's kind of the United States and Europe. So we're 13% of the way there. But if I'm guessing by next week we're going to learn about California and Florida dealers, and maybe we'll end up getting closer to the maybe the 25% mark or maybe the 50% mark. Who knows? But progress, not perfection. I think that's kind of what's ringing in my head. This particular earnings wasn't about earnings. It was about, in my opinion, it was about solving problems. And is Fisker solving the problems of delivery, service? And I think we learned, hey, deliveries are out, dealers are in. We kind of know they're moving towards that. And software is another issue that we've learned about, or we've learned about over time, or known about. And having a hard time, rolling out software, and we're at 2.0 now. Things should get better there. So there's a lot of positives, and you look at this, the balance sheet. That's probably the biggest negative, and that's what the company has to figure out is the financial. They have to financial engineer their way out of 2024. And I don't know what that looks like. It's going to be interesting continuing to follow this. I follow the company every day. I'm sure you guys, read something about Fisker every day, or, if you get your Fisker Ocean, you're thinking about Fisker every day. And I'm really interested in seeing kind of how this plays out. I still am very optimistic and believe in the company. I wanted to actually do, I was watching Ted Lasso the other day. I don't know if you guys watched that show, but they have of the locker room, they have the big sign that says believe. And every time I look at my Fisker Ocean, get and drive it, I think of believe. I still believe in the company. I believe in the mission. I believe in everything that the company is doing. And it's going to be exciting to continue on this journey and see, I'm in it for the long haul. This is, still one of my favorite things to do every day is to tune in to Fisker, see what's going on, write about it, journal, and share my thoughts. And not going to stop doing that because the stock price is 47 cents a share. But it'll be interesting to see, how Fisker comes out of this. Can they come out of this? And I'm gonna go with I think they can. But everyone has their own opinion, and that's mine. So anyway, guys, let's look at the press release. I'm babbling here. The funny thing about this press release, I don't know if you guys read it, but it included the most quotes I have ever seen in a press release. It's dialogue from Henrik Fisker all throughout the thing. It's a lot of dialogue. I thought it was actually kind of an interesting write-up. So the bit I'm going to read here, I thought this was kind of an interesting one. Out of all the quotes, I thought this was probably the most interesting one. It says, on the strategic front, Fisker is in negotiations with a large automaker for a potential transaction, which could include an investment in Fisker, joint development of one or more electric vehicle platforms in North America manufacturing. The closing of any transaction would be subject to satisfaction of important conditions, including completion of due diligence and negotiation execution of appropriate definitive agreements. So again, this whole press release is intertwined with the potential strategic partnership that could potentially happen. And there's a lot of coulda, woulda, shoulda dashed in between, but there's still a lot of work to be done there. Mentioning definitive agreements still need to be worked out. Those things can take forever working with big companies. And Fisker has, I believe enough cash to probably get them through at least half the remaining of this year, probably based on kind of what we saw, and if close to 400 million in cash. If operations stay about 100 million, then they got more than enough for this year. But if they want to continue iterating, developing, doing a lot of the growth projects they're working on, they obviously need more capital. And they said they're going to return to the equity markets to do so. And that means we're going to see a lot more dilution and more debt potentially piled onto the company. So that was kind of what I read in the biggest eye-opening paragraph. So I'm going to read that paragraph, and then if you guys have thoughts, I'd love to hear what you say. But it was kind of what Gita mentioned. She said that Fisker expects its capital expenditures and working capital requirements to decrease during 2024 and beyond as it enters the second year of Ocean production. The company's business plan is highly dependent on the successful transition to its new dealer partner model in 2024. So we mentioned that just a moment ago. And furthermore, to the extent Fisker's current resources are insufficient to satisfy its requirements over the next 12 months, the company will need to seek additional equity or debt financing, and there can be no assurances that Fisker will be successful in these efforts. And it says that if the financing is not available, or if the terms of financing are less desirable than Fisker expects, the company may be forced to decrease its planned level of investments in product development, scale back its operations, including further headcount reductions, and reduce production of the Fisker Ocean, which could have an adverse impact on the company's business and financial prospects. So I thought that was still calls out to me as probably the biggest eye opener in the press release. The outlook of the company was that they're going to target a combined sales directly to consumers and dealers of approximately 20,000 units to 22,000 units in 2024. If dealers have already purchased roughly 1,000 or 975 based on the math that I did earlier, Fisker still has 19,000 sales minus whatever direct-to-consumer sales they've done to date to go. So there's still, we're in month two. Month two's ending tomorrow, today, and we're into month three. So it'll be interesting to see if Fisker can sell. We didn't hear anything about Fisker selling all of their inventory by the end of Q1 2024, which they did talk about, I believe, in either December or January. So they need to onboard. Let's do the math here real quick, and then we can talk about it. So if Fisker wanted to blow out all their inventory, and I believe they have 4,000 some odd vehicles left. How many do they have left? 4,000. We had 10,150, say, and we sold 4,928 last year. So it puts us about, say, 5,200. And if each dealer lot takes about 75, we need to have 69 dealers on board. Are we going to get 69 dealers onboarded between the end of March 31st, end of Q1? Probably not, but Fisker still does direct consumer sales. So what do you guys think? What are you reflecting kind of on this for the past hour and a half? A lot of information thrown at all of us, a lot of digestion that needs to happen. What are your thoughts kind of going down the road as a Fisker Ocean owner? Are you concerned that, we all know Fisker has a lot of work to do. Are you guys concerned about anything as a Fisker Ocean owner? Start there. And then are you concerned as a Fisker Ocean shareholder?
Well, first, when I get in the vehicle, it's still a thrill to drive. every day. And I've gotten a chance now to drive a few different EVs, and I know you guys have been in the EV game a lot longer than I have. I came from, I expressed this on my channel. I came from a Jeep Cherokee Trailhawk and a Corvette, so something completely different. So I want to say that because when I got into the Fisker Ocean, I said it was my dream vehicle. I loved how it looked. I liked the 2016 sketch, and I still love it. Every time I open it, even though the key fob sometimes takes 10 times to push, it's still, the moment you leave the driveway, it's still a blast. And I look for reasons to drive that vehicle.
Mm-hmm.
And, people always say, if you don't turn around when you park the car and walk away, it's the wrong car. I do that every time. And, I'm super thrilled about 2.0. I think 2.0 is, once everybody gets it, including myself, I think that's going to do a lot for Fisker. It's going to tone down some of that, the jargon for a while. People are going to be happy with the general drivability of the vehicle. And, right now I'm happy with 1.11. I've had the weird little bugs like anybody else, but it's nothing you can't deal with. And it's still the speed, like whenever you just are having a bad day, put it into hyper mode. Or, I saw someone post about their sport that they had a hyper mode. And I was like, I don't know how that's possible, but put it in a hyper mode. And so for me, that's how I feel. I'm not. It's easy to get stuck in the paying attention to where the stock goes every day. I do,
Yeah.
But it's not going to be my life savings for me. I do empathize with anybody that is the case, but for me, it's I drive the vehicle, and that's what I care about. I do feel and have faith that no matter what the direction the vehicle is going to be taken care of. And that's, my thoughts on that subject. Anybody who drives drives the Ocean, for the most part, will understand why you buy the Ocean. You can compare it to 100 Mercedes or BMW or whatever super luxurious car out there, but there's a difference. It's a different enthusiasm when you get in that car versus another car. And one thing I love about you, Sean, is you drove the Model Y, and Tesla's a great company. They've been around.
Model 3 for me.
Model 3, I apologize.
Yeah.
So I don't knock Tesla. They've been around. They're the OG in the game. But it's anybody who drives the Ocean, it's one other option, and you get to experience what, everything they put into it. And I guess for me, it's tough to see the company just basically go down based on where the stock profile is.
Sure.
And by go down, I'm talking about just like people cutting that down, because when you get in the vehicle, that's not the case. Those to be tied together, but they don't.
Yeah. Yeah. And
I guess that's my thought. Sorry. A little longer.
No, that's great. That's great. What do you think, Matt?
Yeah, I agree. Mike, with his thoughts are definitely how I feel too. One of the things I'm concerned about is, I'm hopeful about if they can get this strategic partnership with an OEM. It sounds terrible that there's only one company that they're talking to right now, but if they can get this, I think it makes the rest of the year and going on much easier as far as future vehicles go. Mm-hmm. And I think that is a big concern. As far as the dealership pivot, I think that is just wonderful for current owners because, as they expand with more locations, it'll be around the country. areas like my area that were in North Carolina, that was, we had to have people come in from out of state to service our vehicles. This will be much better now. There's going to be a new dealership in my town, and there's going to be another one 2 hours away also. So I think that'll be great for service and people who want to look at the vehicles, test drive. I mean, there's nothing like seeing it in person. And I know they have done a good job with the tours, electrified tour going around the country, but not everybody can, attend those events. And I think the two important things I see from this call is the dealerships and that strategic OEM. If that works out and they get the Alaska moving forward, I think that makes me feel better.
Yeah. Yeah, they need a number two product, in my opinion, right? You can't just rely solely on, the Fisker Ocean. From a lot of people use the term the one-trick pony, but like they do need something to follow the Ocean, and that is the truck. That's what we're going to see, the truck. I think I'm in the same boat as you two. Love my Ocean. After listening to this call, it doesn't make me it makes me like my car just as much as before, the earnings report came out. When I go log into my brokerage account and I see tomorrow morning my IRA down, that's obviously going to be a disappointment, but it is what it is. And Mike, have my entire IRA with Fisker, so it's all or none. Yeah, it's an all or none, which is okay. But I know the risk going into it, and it's extremely speculative stock, right? I think we talked about that before. It's an extremely speculative, and
yeah,
at times I've gotten to the point where I can sleep at night. It is what it is. Whatever happens, happens. It's out of my control, and I'm just a passive investor. And like everyone else, if you can't take the risk, you don't buy the shares. And I know the risk going into it, and it is my responsibility. Don't give financial advice. We never give financial advice on any of these shows, and everyone's responsible for their own decisions. And it'll be interesting to see what happens. I'm not counting the company out, put it that way, after hearing this. And another saying that a lot of people say when you read a report like this, I'm going to go with the kitchen sinked it. That could have been the title. Fisker kitchen sinks this quarter, and they put every possible bad thing that I think of in this press release. So sentiment of the press release, very negative. And it's just a matter of seeing what happens over the coming weeks and months, and I'm certainly going to be rooting for the company. Let's go ahead and give this call tonight just a big thank you for everybody joining us. Probably a fun, it was fun chatting with people, fun chatting with Mike and Nat as always. Maybe we'll have something to talk about next week. Maybe we'll do an All Things Fisker if you guys are available. And after we digest all this, there's still so much information and things that we have to probably go through, and we'll just go from there. But thank you everybody for joining us. I'll see you from San Diego, and these gentlemen from the East Coast will see you as well. All right, everybody.
Cheers.
Take care.